You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to refer to as the Options Insider Radio Network. Growing bigger, growing stronger every day. We're like a little toddler, just blossoming and growing every day. 13 shows now, more on the horizon. I'm sure you've checked out all the latest. And while you're checking them out, be sure to check out our mobile app, of course, in your app store of choice, iOS, Android, even Amazon Kindle Fire. You can stream all of 300 plus episodes of the Option Block, as well as a few other programs here or there. You can download them while you're traveling around the globe, and you can even hit that contact button and fire off your questions and comments right away to the host of the show. So when Andrew says something that just fires you up and you say, "No, that is not right, sir, I contest you," now you have a button to do just that. So check it out, the Options Insider Radio Network mobile app. I think you're going to like it. And joining me on the old all-star panel today, since I just mocked him, I will give him pride of place. We are joined, as always, by the Mainer himself, none other than the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, sir.
It's hard to talk with all this just egg on my face that's just been splattered across the airwaves. I'm wounded, but I'm okay. I'm good.
Quite the sensitive fellow. I've learned that about you.
Hugely sensitive. 16 years on trading floors. I'm actually 18. I'm very sensitive. Very, very sensitive.
Because that's the place that's conducive to a sensitive lifestyle. Let's just leave
exactly.
Let's just leave it there.
The more sensitive, the better down there.
Yes, you really want to commune with the emotional needs of your fellow traders. I find it's healthy.
Exactly.
In the long term.
You want to commune with the guys in the pit, for sure.
All right, before we go farther down that awful, awful rabbit hole, I will also toss it to our other fellow compatriot here on the All-Star panel, beaming in from Casa Jacobson, none other than the Viceroy himself, good old Alex Jacobson, holding down the Options Express by Charles Schwab hot seat. Mr. Jacobson, welcome back to the program, sir.
Mark, good to be here today. It was a much busier day than the averages seem to give you the impression of. A lot of momentum today. And, I joke about Lulu saying Twitter is the new Lulu. Today, Lulu was the new Twitter. So lots of interesting stuff going on today.
All right, I like it. I think without further ado, let's dive right into that interesting stuff and dive right on into the trading block.
The trading block.
All right, everybody, welcome to the Trading Block. This is, of course, the portion of the program where we break down what was moving, what was lighting up the old tape on the old street today from a broad perspective as well as from an options perspective. Going to kick things off. As Alex mentioned, not a whole heck of a lot going on from a broad index perspective. Most of the major indices, the Dow unched on the day, the S&P down a little bit, fractionally unched on the day, and the Q's down a little bit more, about 0.5% or so. But that's really about it. And then VIX cash taking a little bit of a breather again today as well, down about 1/3 of a point as well. But despite that seeming malaise on the street, there was actually some activity lurking in them there hills. So Alex, since you brought it up, we'll start with you. What really caught your eye? What was rocking the tape over there at OX today?
Well, there were a couple threads going on today. There seemed to be a bit of a mass exodus from momentum. So lots of put buying in the Googles, the Teslas, the Netflix, the Priceline, and that also seemed to be the tone of both CNBC and Bloomberg today. As I mentioned, I'm studying for an exam tomorrow, so I spent part of the day in the public library here with my face buried in a book and my iPod on. So I'm listening to the business news. Shows you what a boring guy I am. But there seemed to be this thread of a lack of growth and the exodus out of some of those triple-digit names that have been carrying us forward. And we saw that today with put buying. We saw that today with stock selling. We saw that very much across the board. But the other thing we saw today that was kind of curious was where the money was going. And the money seemed to be going into some longer dated quality names. So it was going into the blue chips. It was going into the AT&Ts and the General Electrics and a lot of the energy stocks, a lot of the dividend energy stocks. We saw some leaps buying there, but also an old familiar name on the OX desk. Lululemon had its first real pop in a long time, earnings today, and the earnings were okay. The outlook was reduced a little bit, but it took the stock back over 50, and we'd had a lot of activities. Lulu trades weeklies with dollar strikes, and this is kind of the strong case why the weeklies with dollar strikes are such an interesting playground in an earnings week. But a lot of activity in the weeklies, and we saw it close up over the 50 mark, which it hasn't seen for a while. So it was a busier day than the averages would have led you to believe.
Yeah, I'm looking here at Lulu, and you're right, it was a pretty active day for our favorite makers of sheer see-through yoga pants. And I think that straddle went out at about $3, the 48 half straddle. So usually don't see it that accurate, and yet today they got it right. So yeah, nice to see a few names. I was joking last episode, there are a lot of good names to kick off earnings season, but we're seeing a few interesting ones. Of course, got BlackBerry on the old horizon as well. That's coming out actually tomorrow morning before the open. So hopefully you got all your positioning out there, and if you're looking like everybody else, a lot of downside puts. Surprise, surprise. Not a lot of love for BlackBerry floating around these days. But you're right, Alex. I was kind of taking the pulse of the market and the street today as well. Once in a while, I like to check in with Main Street, so I'll open up the old USA Today money section and see what they're talking about. And today they were talking about growing alarm and fear on the street and a growing sense of froth in the markets. I thought that was interesting because usually when you see something like that, they usually follow it up with, and the VIX is X, and yet they didn't have it in there. So they talked a lot about froth and uncertainty and turbulence, all words that are very much synonymous with volatility in the marketplace, yet not a mention of VIX. I found surprising because it seems like you cannot escape VIX anywhere these days. Speaking of escaping VIX, Mr. Andrew, I know you don't want to escape VIX. You want to embrace it. You want to hold it close and love it very dearly. So tell us what caught your eye in today's activity, either from a VIX perspective or maybe in one of your little crazy favorites like Zynga or something else that's catching your eye there.
I want to embrace the BRICS. I think that's the sugar content in wine. Pretty sure the BRICS.
Is that or the Brazil, Russia, India, China if you go for the overseas stuff?
That could be the Brazil, which Brazil, speaking of, my emerging markets, I think are the closet. will be the closet winner for 2014. Full disclosure, I'm long some of those things. But I think what's catching my eye, what ETF traded at almost a 1-year high today? The TLT. The last time it reached this level was, I'm going to say June of 2013. So right after we had that sort of first go round with the Fed sort of tapering, we had that pretty big sell-off in the TLT from 124 down to around 108, and the emerging markets went with it. Here we are a year later. Our Fed chairman is definitely saying we are getting out of the bond buying business. She did some of their gobbledygook on it, but for the most part, they're definitely, they look like they're going to taper, and we've had nothing but bonds rally since then. So I guess if the Fed doesn't want to buy them, then the private capital is buying them. And the second thing I've seen is the emerging markets over the last week, maybe save for Russia, which is going sort of sideways, have rallied big. Brazil rallied big. Even in the face of what is not great news from what's supposed to be bad for the emerging markets, right? Oh, I'm going to take all my money out of emerging markets and I'm going to buy treasuries. Well, it looks like they're taking money out of U.S. stocks and they're buying treasuries in emerging markets. So, you have U.S. equities, which I don't think they're crazy overvalued, but they're not cheap. They certainly weren't like they were in 09, 010, 011. Even into 012, you could have got, what was that? You could have paid $12.50 for the S&P 500, hard to believe, but it was there, or $12.75 or something like that. So I think money is starting to find cheaper assets. The emerging markets didn't melt down. Treasuries, yields are not going to 5%. And the reality is some money is finding those things, and the Fed getting out of the economy, I think on balance will be better. But like I said in our report today, it's sort of like a toddler, right? The first couple weeks, that toddler tries to walk, they're falling down. It's ugly, it's scary, they whack their head. And then the weeks go by and all of a sudden the toddler's up, it's walking, it's, holding on to the wall, it's doing the shimmy and all that kind of stuff, which I think what our equity market is going to end up doing once it sort of gets itself off the, I was going to use some other euphemisms, but I won't. It has to wean itself off of the Fed. And I think that's kind of what's happening now. That cheap capital or that was out there, maybe pressing some of those momentum stocks, that money's going away. Those stocks are getting smacked, maybe back to more realistic levels. The big index haven't gotten really crushed yet. The value stocks are actually doing okay. The Intels, the Microsofts, pretty near year high still. So there's been a little bit of rejiggering. So I think money is going to places that essentially are undervalued or cheap, that haven't moved in the last 2 or 3 years. Some money is finding treasuries again because all of a sudden 3.5%, maybe that's going to be around for a while. And again, I think the little geopolitical risk thrown in there. But what's interesting is how high, treasuries can go. Alex might have a better sense on that, but holy guacamole, those yields are getting pretty low again. And the Fed looks like they're having less and less to do with it, which I think overall is good.
Second toddler reference on this show today. I must have kids on the brain.
I know, because you started with it. I'm like, he just screwed up my whole thing.
Of course, that's the difference between you and your option compatriot there, is that you will perhaps take a reference down a rabbit hole, but then step back from the abyss, whereas he will just plunge straight ahead into the darkness.
Head
Consequences
first,
be damned.
Head first.
All right, and speaking of toddlers and damning the consequences, we are also joined, better late than never, by he of St. Charles, Illinois fame, none other than Uncle Mike Tusaw from RCM Asset Management. Uncle Mike, welcome back to the show, sir.
Always happy to be here. Always happy to be here. It's definitely just looking out my window out here in the hinterlands, as you put it, of St. Charles, and I don't know. I think Maine must have stolen our sunshine. It's just kind of sad that we don't have the sun anymore. Maybe it'll come back one day.
On the plus side, though, we are down here downtown, right on the river, and the tour boats are going again, and they seem pretty full. So even in a 30 to 40 degree weather day, the people are out there flocking to the tour boats. So that's always a good sign that spring is in the air here in Chicago when the tour boats finally come back. We kind of like that. And they break up the large flows of ice going down the river. That makes it a little nicer. So, Uncle Mike, aside from spending some time in idyllic St. Charles, what else was catching your eye in today's market activity?
Well, a couple things. I think that Alex and Andrew really touched a lot upon the bonds, so I don't need to revisit that. But that's definitely probably the thing that was lighting up my tape, as you would put it, the most, just seeing the rally in TLT, for example. I don't think that today wasn't necessarily a huge activity day for me personally, but yesterday was, just with rolling down puts and that type of thing. And I think that, being the shameless bull that I am, I still think this is a buying opportunity. We're close right now. If we're right on the precipice of being negative for the first quarter, so I think it'll be interesting to see how the market shapes up tomorrow. If we have a down day, we could be negative for Q1, and I don't think a lot of people would have predicted that. So with that, I think it's important to have risk management in place, and I think it's also important to manage your risk in terms of, you don't just buy puts, you got to sell some puts against them to finance them. And as a wise man once said, do stuff. And didn't do too much stuff today, but yesterday did a lot of stuff.
Yes, a lot of interesting stuff cooking in the markets. A lot of stuff cooking here for this show, so I think we're going to keep on rolling right on into our next segment, the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome back to the Odd Block. This is, of course, the portion of the show where we like to break down the interesting, the bizarre, the sometimes funky paper that's lighting up the old options tape today. Going to kick things off out there in a name a few of you may have heard of, Vox, Voox. I think it's pronounced VIX. I'm not sure, but it's a pretty popular one. It seems to be a lot of people like to talk about this name, and they pay attention to it every now and then. VIX cash, of course, closing today about 14.62, and VIX, as it is wont to do these days, usually lighting up the tape, usually doing about, close to 800,000, 760,000 contracts a day. Today, a bit of a light day, given, I think, reflecting the overall malaise on the street today. Only about half that, about 344,000 contracts going up today. So from a VIX perspective today, it actually was an abnormally light day. What caught our eye was actually some interesting combos going up here in VIX. Before I mention that, I should also mention, Andrew, we learned a valuable lesson today about VIX, that VIX was not indeed shares of a stock. You have to love our eagle eye readers. We posted this up on the site earlier today, and we made the mistake, or should I say someone in Maine made the mistake of mentioning shares of VIX, and our readers, as they are wont to do, jumped on it right away. And we're like, no, it is not a VIX. And as they are wont to do, maybe they replied to a little bit snarkily, which was kind of fun. But you gotta love that. People are on that stuff instantly. It cracks me up. Whenever any little thing is out of order, they are eager to remind us of that fact.
All I can say is I have a template and I screwed up. I didn't edit it well. So yes.
There you go, listeners. Spot on. Eagle-eyed as always. We welcome that feedback. Keep it up. Just take it easy on poor Andrew. Like I said, he's very sensitive. So when you hit him with the snark, he tends to crumble.
Yes, I did. I'm crumbling. And, to that reader, yeah, good job.
I'm sure that's exactly what you wanted to say to that reader. All right, moving on. We saw some size combos going up out here in VIX land in particular. We saw size trading of the May 14 puts, about 10,000 of those going up. And against that, we saw the 1723 call spread going up, size as well, all about 10,000 times 9,500 or so. Tons of open interest on each strike, over 100,000 on pretty much every strike, 160,000 open on the 23s. All of it going up net for about 62.5 cents. Senior Rock Lobster, walk us through what our friend did here in this pretty funky three-way.
Yeah. Okay. So what I got is, the May, there's a fairly substantial, there's pretty decent premium in the May VIX future. So while the cash is 15, the actual at the money for May is more like 17. As I looked at this, I'm just trying to pull up the May future price as I'm speaking here because I haven't looked at it in the last hour. So yeah, 16, and it was higher earlier today. It was trading around the 17 handle. So what the trader did look like is they sold a 17.23 call spread, which is at the time was about $2 over parity for VIX, and they bought the 14 put. Hard to tell if it was an opening trade or closing trade. I'm going to say 90 delta. It was an opening trade, mostly because we haven't got enough of a pop in VIX for him to have bought that cheap and really made any money to close it out. So it's doubtful that it's a close. They're looking for basically a landing spot anywhere from 1762 and south for VIX, which I don't think is a very bad bet for May, unless of course the Russians decide to pour over the border and shoot all the poor innocent Ukrainian people, which is still possible since they haven't left the border. Sad, I can't believe I'm laughing at it, but it's also almost too absurd to believe, but it could happen. But that's what this trader looks like they're doing. So they're using a little modified risk reversal with some risk control on the upside and, looking for volatility to come in. And right now the trade looks actually really good. He pretty much, the trade I was saying but he pretty much hit near the top for VIX today with this trade. So not a bad call at all by whoever the trader was.
And I don't know if you know this, but the worst is over out there in the Ukraine because Steven Seagal is over there and he just called Vladimir Putin his brother. So therefore,
he did.
Therefore,
is he out there on a
when
peace
Steven
mission?
Seagal is on the case, all international issues will be resolved.
Oh man, for real?
Yeah.
It's like Dennis Rodman going to Korea.
Exactly.
It's all good.
Exactly. We're all saved now. It's all over. Steven Seagal is on the case. All right.
I feel better. Although
Yes.
he did have some good movies back
in the day. I'll give Under Siege a nod. That was a pretty decent one, and there's a couple others I forget their names, but there were a few decent ones back in the day. I will give him that. All right, moving on to not too geographically far away from the Ukraine, but not perhaps out of mind. We're talking about EQT Corporation, ticker symbol EQT, going up today, closing at about a 1.5%, closing at $96.84. And the reason why I say this is somewhat related is that this is, of course, a nat gas producer, and what goes on in Ukraine has reverberations throughout this market. And we saw someone coming in betting that the worst is not over out there in nat gas land from a vol perspective, because we saw a pretty sizable outright strangle going up, and this is worthy of note just for the fact that we don't see too many of these going up. Usually you'll see selling the puts, buying the calls, doing the risk reversals, or using the puts to finance something else, an upside call spread. Very rarely do you see the outright gobbling up of premium like this. And what we saw was about 1,300 of the SEP 90 puts going up, along with the same number of the SEP 105 calls going up for a net of $8.40. Open interest is pretty nominal on both strikes, so it's all open in paper. Went up in two big blocks over there on the Amex. And this is an interesting one, Andrew. Like I said, you don't see people coming in swinging for the fences like this that often, but this certainly reflects a bit of maybe a contrarian view out here in nat gas. A lot of people thinking that the big move is over. This guy is saying, no, there's more to come.
I agree. I spent a little time trying to parse how the volume hit. Volatility's up a little bit, probably a trade that was accommodated because there's not a lot of volume here in it. Yeah, somebody spent $1 million on out of the money juice in September. I'm like, wow. That's a serious purchase for basically lots of out of the money options. So, I mean, you're looking for a pretty big move in this thing. Now, obviously, it's a $96 number. It generates lots of dough. The company itself, it had a fairly big range, but you know, it's not a it's not a small chunk of change. Volatility took a little jump in here for sure, though. So, I mean, the thing has just this particular name. February of last year was only trading around $60, and it's had basically a straight run up. So, somebody's looking for a big move. That's a big chunk of juice. They got a lot of time, but still a low vol stock, and they're looking for a, what I would think would be a pretty sizable move for it.
Interesting play. I can't say I'm too far away from them. The fact that I think Nat Gas might have some more life left in it. I'm not sure if I'm as committed as this fellow here, but still interesting play nonetheless. Get some commodity talk here on the show. A lot of people like to write in, always saying, "Hey, hit some more on the commodities and the commodity vol." So there you go, listeners. And then moving on to another newcomer here in the world of the odd block. This is Ares Capital Corporation, ticker symbol ARCC. And if you were jonesing for some straight up out of the money call buys, and we got a story for you here. This is the name that does about 300 contracts a day, doing a whopping 10,000 today. And guess what most of these trades were? They were, of course, out of the money calls, pretty near term out of the money calls too. This one closed today $17.50, pretty much unched on the day. Someone coming in and just piling into a ton of the APE 18 calls. When we profiled it, it was only about 1,200. By the end of the day, it was 7,500. So a ton of these calls. The initial block went up for about 10 cents. I think this bidding activity bid it up a little bit because they went out a dime at 15. So there was some love for this strike. Open interest, nominal, 100 contracts or so. So this is all open in paper. Senior Andrew, you didn't see any stock or anything else with this. This is pretty much straight up as it appears, out of the money call grab.
Yeah, exactly. Very reminiscent. Do you remember DGX at the beginning of the week?
I do remember that one.
The guy buying that. So that stock was up like $4 yesterday. So that those 20-cent calls they bought were worth about 40 to 50 cents, depending. They still haven't closed them yet, so they have till April. So, this smells very similar. Like, why is anybody buying, the 18 strike in a, 8 volatility stock? So maybe something's going to happen. And it has kind of the ring. It could be one of those newsletter type purchases. Because, volume traded, let's say, on every exchange, dime, 15 cents, every exchange. So, we'll see what happens. But it's still clearly, it's a heavy purchase. Let's just say that.
And the other one you mentioned, of course, the DGX April 60s we profiled earlier this week, actually, and we had them filed in our to-watch list. Well, it didn't take long for us to watch them and see what happened out there. You're right, it did move quite a bit yesterday. When we profiled it, the stock was trading on 55. It's trading near 58 today. It's actually sold off a little bit. But these calls are still bid 40 cents at 50, so this guy already has doubled his money if he just hits the bid. If he works it a little bit, he's doing a little bit better. Looks like you're right. He hasn't taken anything off yet. So he's still swinging for the fences here. Maybe he anticipated a little bit larger move and was a little bit underwhelmed by the move. Of course, it's only 5 to handle strikes here, so he had a little limited choice in where he could dive in. But still, so far, he's holding on to those. So we'll keep those filed in the to-watch column. But for now, at least, this is a happy camper. He's doubled his money on his out-of-the-money flyer. And
you could do worse than that.
I could outline many ways that you could do worse. All right, and let's wrap it up here with the Barclays Capital High Yield Spider, a.k.a. Junk, ticker symbol JNK, closing today roughly unched $41.22. This is the name that does about 700-800 contracts a day, doing about 5,000 today. And what we saw, the bulk of that activity, pretty much all of it, was in the April 41 puts, going up for prices around 25 to 30 cents. Open interest is about the exact number, about 4,000 contracts, so makes you wonder if it is indeed closing.
Yeah, I think the initial trade was a put sale, and they're kind of buying them back. That's what it looked like to me. Um, so it didn't move the vol very much, mostly because it looks like the liquidity providers had the contracts to let go, and this J&K is at, I believe, really close to a 52-week high, like like the TLT, really close to near-term highs for bonds. So it just looks like, real simply, it was trading around 40 level. Maybe they sold these puts, now they're buying them back. So definitely a bold move on, rates and things like that, and demand for that for that product. So it looked like it looks like a winner from what I can tell.
All right, and that is going to do it for the old odd block. And now we're going to keep on rolling right on into the Viceroy segment, a.k.a. the Options Expressed by Charles Schwab block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, welcome to the Express Block. This is the portion of the program where the Viceroy puts down his various study guides and proceeds to give us our secret VIP behind-the-scenes tour into the land known as OX. Mr. Viceroy, you may begin our tour, sir. I plugged in my audio guide.
Cool. So growth was in short supply today. So there seemed to be an exodus and a high degree of put buying in many of the momentum names. We touched on that a little bit earlier. A lot of the triple digit stuff got really hammered today. The Teslas, the Pricelines, things like that. Mixed bag in biotech today. And as I said, I was at the library listening to the news channel, and they said biotech got hammered today. And that's one of the momentum issues. But upon looking at quotes, it was really a mixed bag. Some biotech actually did well today. Some got beat up a little bit today. A couple last thoughts. As we've mentioned in the past, Idea Hub is going on to Schwab Mobile. We're doing final training on that next week. So hopefully it'll be up there second or third week of April. Idea Hub for futures options is also going through its last couple variations of testing and language. So that should be up at OX shortly. And then a curious piece of news. Whaley, who created the VIX contracts, has announced that he's gone to a fund manager, and this is kind of interesting. He's announced a spot VIX product, a spot oil product, will be trading as an ETF. So potentially a game changer, and kind of interesting, because if it gets any traction, you would potentially have the ability to do a covered right in things like energy and volatility in the future. Now, how near of a future, and will the product get traction? We'll have to keep an eye on it. But busy day today in a market that looked like it was relatively unchanged, but a busy day.
Spot VIX products. That'll be interesting, I think, for a lot of our listeners. A lot of people jumping into that fray, trying to take a tilt and carve out a piece of that VIX pie. Of course, we talked earlier about the Valdex product and how that may fare when and if that ever gets up and running and has an underlying, and now Whaley jumping into that fray. So a lot of people seeing the explosion of interest in VIX and VXX and all these related products and saying, I need to get myself a piece of that action. I think if anyone's qualified to do it, Whaley certainly is an interesting one. So we'll keep an eye on that, certainly. Interesting news, as always, Mr. Viceroy. Thank you. And now it's time to keep on rolling into my own personal favorite part of the week, because it's time, once again, for the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the Mail Block.
All right, welcome to the Mail Block. As I said last week, we do have quite the backlog of questions from people who sent them in via the feedback form on the website. We're going to work through as many of those as we can. Keep those questions coming. We love them. We love to chat about them here on the old program. First up, we have a question coming in from John King. He writes, could you discuss SPX versus SPY versus ES options, bid-ask slippage versus commission, margin treatment, ex-div / exercise annoyance, etc.? Thanks. My commissions in my case are flat, 75 cents a contract, no ticket charge, and for ES options is $3.65. There's a lot to carve off here on this question, a lot of different topics. This is a very fertile ground for a lot of people writing into the show. There's a lot of different ways we could take this. I think first off, talking bid-ask, comparing anything in that space from a bid-ask perspective, it's hard for me to not come down on the side of SPY for a lot of retail traders. There's a reason that the SPX pit and the options pit over there at the CME are still pretty crowded, and that's because it's one of the few places that market makers can maintain a fairly healthy bid-ask spread in that product. So if you're coming into SPX, you're going to pay for it unless you really have a great broker who can work you somewhere in the middle and facilitate you. Other than that, for a lot of you retail who aren't doing a lot of size, you're paying a lot from a bid-ask perspective, and it's going to take quite a bit to overcome that, and I really don't see a lot of reason for retail to go in and do a few contracts in SPX when you can get them done in SPY so much easier. The markets are so much tighter. It's just a better product, I think, for the vast majority of our listeners. That said, you do mention the ex-div / exercise annoyance. That is a bit of an annoyance. We do see that raise its ugly head every quarter. People, for whatever reason, forget that SPY has a dividend, and they get caught with short calls getting exercised against them, and they come in the following Monday with a short underlying position they never anticipated. We still see that quite a bit. I'm guessing if you are savvy enough to write in about this and mention it, that you're probably going to be aware of that. You can put that little mark in your calendar for the SPY dividend so you don't get surprised. And if you are savvy enough to understand that and avoid that, I think that's one of the major headaches for SPY. Of course, you mentioned the margin treatment. There are a few other things that could be of interest to you. If you really want to do a lot of size in the S&P 500, then of course SPX is a good alternative for you. But unless you're doing serious size, I would recommend you to stay with SPY and avoid the headaches. Mr. Andrew, Mr. Mike, Mr. Alex, anyone take umbrage with that?
I don't know what umbrage is.
It is what's heaped upon me show after show.
And
that's what umbrage is.
And you keep coming back. It's well, one issue is obviously 1256, and I know a lot of people focus on the fact that the SPY isn't a 1256 contract. I'm kind of a firm believer that you trade what's best for you, irrelevant of tax. But I know every time I say that, it lights up some controversy. I mean, the SPX is pit traded, as you pointed out, Mark. That means for some instruments, in some ways, it's harder to get a quote, and in some ways, it's easier to get a quote. The pit now actually does an auction, so it isn't listed screens. The SPY is liquid, trades a ton. It has no exchange fees, so as the listener pointed out, he's got a flat rate. SPY for some people can be cheaper to trade. There's more competition in SPY. The E-mini has no quote-unquote specialist. So big trades SPX, little trades SPY. The E-mini, it's a little contract, and the option on it is a real little contract. So little means a lot of friction.
You know, Alex, I tend to agree with you. The only real pushback people tend to have for SPX for retail is that 60-40 type tax treatment. And that's, I'm with you. I tend not to construct all of my strategies around how they will be taxed. That said, if you're doing a lot of it, it could come back to be worth your while. But again, that's really the only real reason I see for retail to flock into a contract like SPX or even, you know, the ES type product. For the vast majority of listeners, SPY is going to meet your needs and probably exceed them. Uncle Mike, you spend all your time in SPY, right? That's your contract of choice.
It is. Of the three, I like SPY the best, just for the reasons with which you guys brought up. A lot of my clients, if I had more of a client base that was outside of IRAs, then for 60/40 treatment, I may look to do the SPX in some way, shape, or form. But for what I'm doing for the clients, a lot of it, the basis of my existence in a lot of ways is that we leverage ourselves in a smaller IRA account using options on SPY. And then in the larger accounts, we do put money into something a little bit safer. And so with that, for me, the SPY is without a doubt the best fit because tax treatments are relevant in most cases, not every case, but in most cases because of the fact that the options are in an IRA. No question it's easier to get a fill on. No question it's easier to trade, to get into, to get out of. The one thing that I would say for the E-mini, though, is that to give our listeners an idea of it, SPX is the equivalent, a 1 lot in SPX is the equivalent of a 10 lot in SPY. And a 1 lot in the ES, the S&P E-mini, is the equivalent of a 5 lot in SPY, just to kind of give you some perspective on it. The one advantage that the E-mini does offer, even to the retail, in my opinion, would be that you have the 24-hour trading. So with events going on in Russia, if something happens overnight or something along those lines, for the most part with me, with my clients, it's not going to, for the type of trading I do with SPY, overnight gap, we'd really have to have a ginormous overnight gap for something to really be an issue to me. But if you're trading really close to the money, or if you're trading in such a way that you really need to, that you're constantly 2 or 3 points away from a stop loss or something along those lines, then I would consider going on the future side just because of the fact that you have the 24-hour trading.
An excellent point, sir. If you need that middle of the night wake up sweating in terror and you need to hedge, yes, maybe your only game in town. So that is 1 point in its favor. There we go. So hopefully that answered your question, John. Again, it's really kind of what suits your trading style, your trading purposes. But for a lot of us, most of us, I think most of you, SPY should fit a lot of that bill. Just watch out for the dividends and the tax treatment, and you should be okay. All right, next up, we have a question coming in from the mobile app from a listener named Nick Snow. He writes, on option block 323, you mentioned on this show that RBS, which is, of course, the Royal Bank of Scotland, had a bunch of AUG 10 at the money volume today. I noticed this also, and I'm not sure I get it. RBS has lots of problems with the Queen and the LIBOR fees they pay from loans. I'm not sure how I can phrase this so it's tradable, but if any company were to have an IPO of a company owned within, would you buy calls on the company that was public because you assume the cash injection from the IPO would boost the stock of the parent? If you want to get more clarity around that, I can, but I'm sure it will kill your ability to trade RBS. And as an Options Express account holder, tell them to get flies on their scans instead of just condors, with a big smiley face, Alex. So there we go. He's, of course, mentioning or referring to the activity we did last show, which was a big call buyer over there in RBS loading up on the AUG 10 calls, I believe it was. And there it is. Yes, it was the AUG 10 calls. We saw a couple thousand of those going up for about $1, and it was at the money, and we were kind of speculating on why someone would do that. Here is Nick writing in with his idea. I suppose it makes about as much sense as any. I can't imagine really a scenario, though, where an upcoming IPO that is well known to be happening is going to pop the stock that much. I guess unless there's some uncertainty about where it's going to be listed and how much they're going to make from that, I suppose that could have some sort of value on it. But this guy was looking for a roughly 10% pop in the stock in a very, very relatively short time frame. So to think an IPO would do that, I guess it could. I probably wouldn't be loading up on upside calls ahead of an IPO. What's your take, Senior Rock Lobster, about this potential reason for that at-the-money call buy-in?
The only thing I can see is they think the stock's going up. So, RBS was 1220. I think that's about the high. It doesn't do very much, probably because it's half owned by the government anyway. So somebody's just looking to scoop a financial company that's, trading, basically hasn't moved in a year. It would not be the trade that I would do, but that's why we highlight unusual activity. I can't think of a reason why the thing would go up a lot, but that's what the customer thought.
Spoken like a true old-time floor guy. More buyers than sellers, kid.
Well, the thing is, somebody's going to buy an at-the-money option. I only buy at-the-money options if I think the underlying is going to fly. And you have a stock that has not broached the $12 handle in, 5 or 6 years, it would be the absolute wrong thing I would do. But somebody bought it. So maybe they think something's going to happen. They read it and they go, oh, IPO, more money. This thing's going to fly. Well, right now they're down about 20 cents on their calls.
Yeah, so far, not exactly a screaming home run, but a good suggestion, Nick, and we'll definitely have that one filed in our to-be-watched category in case it does pop down the road. Oh, and Alex, a little suggestion there for you for the Idea Hub and for your scanners. He would like you to add the butterflies, not just the condor. So there you go, sir. A little tool tip for you.
It's in work.
All right, and then last up, quick one here from Nishant Pant, and he writes, I love your show so much. Every morning at the gym, I am listening to your podcast instead of music like everybody else. Well, thank you, Nishant. Very nice of you. He goes on to say, one thing I am frustrated on the internet is everybody is just busy explaining what a straddle or strangle or any other thing is, instead of telling the practical things you need to keep in mind. And you guys do such a great job in explaining the gotchas and the Greeks which matter. Is it possible for you to add actionable ideas? For example, tomorrow Groupon is releasing earnings. He wrote this a little while ago. Maybe you could build upon what you have already taught us and explain an actionable idea and tell us why you think a particular trade you are suggesting makes sense. I would pay for such a podcast at the blink of an eye just for the learning aspect of it again. Thanks again for your awesomeness, Nishant. Oh, well, thanks for thanking us for our awesomeness there, Nishant. And we get this request a lot. Can you guys put a lot of, tell us what to buy, tell us what to sell into the show? We don't do that for a lot of reasons. A lot of which is that we work with a lot of partners who are very compliance restrained and they wouldn't be able to participate in that conversation. We want to make sure we get the full depth of opinion and analysis from everybody on the show. And also that there's a lot of that noise out there already. So I think we add a lot more value by telling people what we see in the marketplace and then giving you our analysis of that. So we do a lot of timely stuff. We will tell you what we're trading. We will tell you what's going on in the marketplace. We will tell you what's unusual in the marketplace in our opinion, or sometimes lack thereof on that. So we will give you a lot of weapons with which to arm yourself. But at the end of the day, we want you to really kind of pull the trigger yourself. That said, there are a lot of guys on this program who will clearly and happily help you do that, whether you want to call Andrew and the guys over at the Option Pit and have a little bit more analysis and education on there, or maybe you want to call up Uncle Mike and have him walk you through some of the trades you can do in your own portfolio, or even call a guy like Alex and check out some of the OX webinars and a lot of the trading idea generation tools over there. There's a lot of sources for that stuff if you really want that, but we tend to not do that for a lot of the reasons that I just mentioned. All right, so great question, Nishant. Thank you. A lot of you guys write in with similar veins. We're going to try to get to more of your questions. I'm going to try to filter them more throughout the coming weeks so everybody can get their questions answered here on the old program. But for now, we're going to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, welcome to Around the Block. This is, of course, the portion of the show where we tell you what we're watching, what we're keeping an eye on for the rest of this week into the old weekend. Senior Rock Lobster, we'll start with you. What do you keep an eye on aside from those at-the-money calls out there in RBS?
Treasuries, volatility, and see if there's any kind of recovery in all these growth stocks. Like Google's down $100, 10%. So you're getting some pretty good moves in these things. So that's really that's the stuff lighting up my tape, and see if these Russians decide to actually invade Eastern Ukraine, since nobody seems to do anything about them invading, taking over the Crimea in the first place. Might as well just go grab another one. So I think those are those are some of the issues right now that are sort of fulminating and pressing up against the surface.
Mr. Uncle Mike, what is fulminating and pressing up against your surface, sir?
The Russian surface is pulminating, that's for sure. But right now, my message to the masses, I really think it's a good time to buy the dip. And I'll even give it a 52% guarantee on it this time.
He's stepping up.
Wow, going out on a limb there, sir.
52.
Serious business there. I like it.
What the heck? 53.
Mr. Alex, take us home. What are you watching for the rest of this week, sir?
Andrew and Mike are spot on. Looking at the 10-year, some volatility in the 30-year today. I know we don't talk about that a lot. The lack of growth today, the short supply and the growth issues. We want to see if that continues. As Andrew pointed out, Google down 100 points. But all the traditional option names getting their heads handed to them today. And we saw a lot of put buying. But macro issues, the 10 and the 30-year, the German 10-year, and the gilt has moderated in volatility a bit, but it's still relatively high volatility. So that tells you the world's eyes are on Europe. And that's what we're looking at.
All right, and that is all the time we have for this episode of the Option Block. But before we go, really quickly, let me check in with each of my cohorts here on the old All-Star panel to see what they're cooking, what they're working on that may interest you until the next time the old ASP can gather around the old table. Starting off with you, Uncle Mike Tusaw, what is cooking in the land of RCM Wealth Advisors and RCM Asset Management?
Well, a couple things, actually. First off, we will be announcing our April webinar schedule next week, live on this show. Okay, recorded, but nonetheless on this show. And the other thing that we're going to be doing for our webinars is we're going to be changing them to right after the close. So we've gotten a lot of feedback from people, and that it's funny, in years past, when I first started doing webinars 8 to 10 years ago, it was always seemed best to do them at night when people would work. But now in the age of recorded webinars, it seems like we're getting a lot of feedback for more people would prefer to have them during the day. So we'll be changing our time slot to 3 o'clock Central Time. And by doing that, if you are working at the time, then as always, all of our webinars will be recorded and you'll be able to see the recording. So we have heard the cries of the masses and are moving our time slot.
Good to see that you respond to the cries of the masses, sir. That's always a good thing. That's part of the problem with what's going on out there in Ukraine right now. They should talk to you before they make any annexing decisions. All right.
We do our best.
Mr. Viceroy, what is coming up in the land of OX by Charles Schwab?
So a live event this Saturday in Baton Rouge, Louisiana. Jimmy Rouzan and the crew will be in Baton Rouge talking about all the great features on the OX site and how to trade options and the Greeks. If you're not in the Baton Rouge area, all the live events are simulcast on the site. Just come to optionsexpress.com and register. The simulcast gives you full participation. You can ask questions. You can interact. One other live event, April 26th in Schaumburg. Jimmy and the crew, I will be out there as well, spending a few minutes on Idea Hub. A couple webinars next week, Tuesday, April 1st. Jim Wyckoff will be doing his monthly futures outlook. And also on Tuesday, April 1st, John Kicklighter with his forecast for the dollar and talking about FX. Just come to the site, optionsexpress.com. All the events are free, and there's a whole calendar of stuff.
All right, last and only sometimes least, Mr. Giovinazzi, what is coming up in the land o' the pit?
Yeah, that's a great question. I don't know what the heck we have going on. We launched our gold course, though, which people seem to like already. Hours and hours of education with the live content to actually, so you can figure out how to put all this stuff together. So you can actually understand what the heck is going on with the ideas that come percolating out of the Idea Hub. Nothing like a little education to help you use those type of tools, which is what our gold course is all about. We will be launching a new introductory basic option course that I am writing, probably ready in the next 3 months or so. But as far as right now, it's a little quiet period for Option Pit overall. But, you know, we do have people signing up, checking in and logging in to all of our, to purchase our option goodies, so to speak. So thanks everybody for doing that.
Gotta love it when they purchase the goodies. All
See.
right. And that is going to do it for this episode of the Option Block. Of course, on behalf of the Rock Lobster and the Viceroy and Uncle Mike, and of course myself. I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, for checking out the new mobile app, and of course for writing in with such great questions. Keep them coming. I promise we'll get to you pretty soon. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.